Everyone, Paul here. Today I'm going to be showing you guys a strategy. Now, the main part of the strategy is to use your 9095 and your linear regression candles with CM stochastic. Now, using these three main ones, it can really show you moments of good trades. Today we're going to be using it for crypto. And I'm going to be showing you how to use these three indicators on a longer time frame to find good moments with crypto. So I've showed you guys how to do this with the stock market in my last video. Today I'm going to be showing you how to use this long term for if you want to look at crypto and you want to make profit off of it. You can mainly trade crypto and Forex, so this is mainly for that. So you can use this strategy for, go get a Forex account and trade crypto with it. So if you guys want to do that, there's several brokers that you can use. But you can also use this strategy for finding good moments of when the market's about to go up. So you don't have to trade with this strategy. You can also use this strategy to find all those moments where the market's about to go up, and you can get in on right before those moments where the market's about to start going up, and you could be in profit. So you can use this as just to buy crypto and wait it out and collect your gains and do it that way. So this could be used for both, but mainly I'm going to be teaching you guys how to use this strategy basically when you want to use it for trading crypto. Okay, so for this to work, you basically need to pick an asset. So we're going to be looking at crypto. We might look at a couple cryptos here, but it only really works on the longer time frame. It won't work as well for shorter time frames, so I don't recommend doing this. The smallest time frame I would use this for is a 30-minute chart. So the first thing you want to do is you want to set up with this formula here. Now I have my Ghost Market Pro here for my 9095, but if you guys, for those that want to do it, they just have to go to your indicators here, and you want to go to CM, EMA trend bars. You want to click that twice, and you want to put in 9095. That'll put you with the same thing here where I have my Ghost Market. My Ghost Market Pro basically has a bunch of these moving averages together. So I have my 9095 here. But for you guys, if you guys don't want Ghost Market Pro, it's a paid indicator. You'll have to go to CM, EMA trend bars, and put in 9095. Next thing you want to put in is your linear regression candles. So you want to go here. You want to go to indicators. And want to go to linear regression candles here at the top, and once you do that, you want to hide your regular candles. After that, you have your CM stochastic here, so you want to go to CM stochastic. Now I'll show you how this looks by default. Now up here at the top, you got the custom CM stochastic, and then down here at the bottom, you got the default version here. So basically what I do when you're looking at default version, I make color 0 brighter. It's a green. This is your bullish. So basically bullish. And I make the lines a little bit less thick. Same thing for the bearish. Make a bright red, less thick. And for the neutral is a very important color. So I just have it being a neutral color to what green and red is. So I have white here. So it's the same thing. You make it less thick, but make it a color that stands out. Now, you can choose white. You can choose yellow. It's just something that stands out. You don't want any really dark color there. And then you want to check off upper line, lower line, and then you also want to check off all these. You want to check out the filler, all that. You want to check that off, and you'll be left with how it looks up here. Now this other one down here at the bottom, this is just optional. This is just further confirmation for trades. This is just this is the difference of two moving averages basically, and I just have it set to 13 and 23. That's optional. You don't have to use it. But I just use it to confirm, reversals and things like that. It's just an extra indicator to help. You don't have to have it like that, but it's up to you guys if you want to use it. So the strategy, first thing you want to do is you want to identify, and you want to look at everything on a long time frame. So you go to your day. We're going to look at Bitcoin here for a second. Now, first thing you want to identify is you want to look at your linear regression candles. And you basically want to enter your trade when the line is crossing the 90.95. So you want to find, if you miss that cross, you want to find the last time it crossed, because that will tell you basically the overall direction. So if we look at Bitcoin on the day here, and we look at the line, the plot line from the linear regression candles, see that it crossed right here. And so that because of this, and we're looking at it on the day, we can know that it started going up. We can easily tell right now when it became bullish was right here. You could see that with, and you can see that with the difference of two moving averages as well. But this is when it started becoming bullish, which was around April 24th. That's when it started going up. So you could pretty much visually see when to get in the trade here, whether you want to focus on the day, but the longer time frame will help you out the best here. So we've identified that since this time right here, it started going bullish. So what direction do you focus on? You focus on uptrends. So you could hold off here, and you could trade on the day actually here if you wanted to. So if you miss this moment here, you want to wait for the linear regression plot line to cross the 90.95. If you miss that, then your next point of entry on here is you have to wait for a little pullback. So, it crossed right here, pulled back a little, and you want to wait for the candle to come back up through that plot line. So you could find that on the day. You can actually find that on the other time frames. It depends on how long you want to wait. So, but let's just real quickly look at this on the day. We've identified that the trend is up. So first thing, we've identified that the trend is going up. So if you want to go to a downtrend, it's the opposite. So the linear regression candle plot line here across down at this point. So when it was right here, this is when you would be focusing on downtrend. So look at it on the day and see where the last time it crossed, and that's the direction you focus on. I don't recommend going against the trend. I recommend going with the trend. So with this, you got to wait. So like I said, this is the start of the uptrend. You could have rode it out all the way up here to the top. It pulled back a little bit, and then what you want to wait for is you want to wait for the candle to go back through that plot. The direction is still up, so what you basically have to do is wait for the candle to come back up through that plot line, and that's when you enter again. So each of these are trades that you can take. So you could take your trade here. You could take your trade here. You could start the trade here. It doesn't really go all the way down here. You could take a trade here. It pulls back a little right here. You could take your trade here. Pulls back a little. You could take your trade here. We are still bullish at this point. So you could ride these trades out because it literally shows you when to enter and when to exit. Because if you miss that initial cross, you enter here and then you basically just exit when it touches the line again. So then it crosses down, and then right now it has entered again. So we're bullish. So let's real quickly, if you don't want to do this on the day, you can, you go down in your time frame. So the next time frame I would look at would be, I look like the 4 hour. We can look at the 4 hour here, and it's the same thing. We know that the overall direction is up, so we want to be focusing. We want to be focusing on when that linear regression candle plot line is crossing the 90.95. So we see some moments right here. This is the 4 hour. crosses here, so as long, and this is an important thing to remember, as long as the linear regression candle plot line is crossed the 90.95 and it has not turned around and go back down. This is why I do the longer time frame, because it takes a lot for that. It takes a lot for that regression plot line to turn around. So that's how you know you're pretty much in a good trade. As long as the line goes above the 90.95, you could probably find some pretty good trades. So say right here, it crossed right here. So you could enter right about here and exit about here. Or you could have wrote it out up here. So we know the overall direction is up, so you want to focus on, it's not really crossing all the way here, but you could still do it this one. And you can also be looking at your CM stochastic here. Now for the CM stochastic, what you want to look for is you want to look for the neutral zone. So with the CM stochastic, it needs to line up with what the linear regression plot line is doing. So you want to look for all your neutral zones. It usually goes from red to green, red, neutral, green, neutral, red. It usually does that. So you want to look for your neutral zones after it has gone down, and that's another confirmation. That's why we use the CM stochastic. So right up here, you would see right here, it goes white, red, white, and you would enter here because you also see the candle going through. You also see the candle going through the plot line right here, and you can write that one out. So let's look at this real quickly on the hour. We'll look at the hour and we'll look at the 30-minute. So we know the direction is going up. So basically, you want to look for a couple things. You want to look for the plot line to cross the 90.95. You see that happen right here. So you could have got in a quick one right here. You could have got in a quick one right here. And you got some brief ones. These one right here, and there's one right here. And if you want to look for it with the CM stochastic, you want to wait for it to go. There's these sideways moments here, but you see red, neutral, green, brief one there. You see red, neutral, green right here, so that's one right there. And then you could scalp this on the hour. So that's doing it with Bitcoin. Now this will work for other assets as well. So Bitcoin, let's real quickly look at Ethereum. Yeah, so Ethereum's the same thing. You want to identify when it starts going bullish. So we've identified right here, at this point right here, which was on May 13th. The linear regression candle plot line has crossed the 90.95, so this is the moment where it starts going up. Looking at this on the day, you could have got in right here and closed the trade right about here. A little bit sideways here. And then you see it come right back up through here. There's another trade. And it pulled back a bit. And it comes back up here. You see the candle come right back up through the plot line. So what you want to do when you want to look for trades is, once you've identified the direction with the 90.95, you want to wait for a pullback, whichever time frame you're using. You want to wait for a pullback, and then you want to wait for the candle to come, like right here. You see it went up, it pulled back a bit. Since the overall direction is up, you want to wait for the candle to go back up through that plot line. So that's how you do it. But first thing you want to look for is you want to look for the plot line to be crossing the 90.95. If you miss that, then you want to be going with that direction, and you want to wait for those candles to go back up through that plot line. So that's basically how you do it. And then you use your CM stochastic here to make other confirmations, to confirmation the trade. With CM stochastic, you want to wait for it to go neutral, and then it just switch, because it usually goes from red, neutral, green. It usually doesn't happen all the time, But you can also confirm it more with that. And you also have your other confirmation with your difference of two moving averages, which also help you stay in your trade longer if you want to hold out longer. Because if this goes below the zero line, it's obviously going for a little bit of a retracement. So that's something you want to look for. But anyway, if you guys, this is the strategy that I use. I use it for stocks, and I use it for crypto, and I use it for other assets. It's a very, very helpful custom strategy that I have uncovered. The main three you need here is your linear regression candles, your 9095. Go to CM EMA trend bars and put in 9095, and then you need to do your CM stochastic. The difference of two moving averages is optional. It's what I use for further confirmation. You guys don't have to use it. But anyway, if you guys like the strategy for crypto, I'll be talking about this for other assets as well. It works for a lot of them. It works all types of assets. But anyway, if you guys like this strategy, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.